The onshore Chinese Yuan exchange rate against the US dollar fell below 7.10 for the first time since November 30, 2022. On May 31, news from the financial industry stated that, according to China Currency Network, the onshore Chinese Yuan (RMB) exchange rate against the US dollar (USD) fell below 7.10 for the first time since November 30, 2022. In addition, the offshore RMB exchange rate against the US dollar once fell below 7.11, hitting a low of 7.1105 and falling more than 200 points during the day. The main reasons for this round of RMB depreciation, pointed out by DeBank Securities, are 1. The strong performance of U.S. economic data may lead to a short-term strengthening of the dollar due to rising risk aversion. 2. The growth rate of domestic economic data has slowed down, and the market's concern about the uncertainty of the economic recovery has increased. 3. The spread of interest rates between China and the United States has widened, and the demand for foreign exchange settlement in China has weakened. Zhang Yu of Huachuang Securities believes that the probability of a unilateral depreciation trend in the exchange rate is not high, and there may still be a stable or slight foundation in the future. First, in terms of pricing, the exchange rate relative value center is not expensive. Second, in terms of policy, there is no obvious intention of regulation and intervention, and tool reserves are sufficient. And third, whether internal and external factors resonate in terms of external pressure, compared with Europe, the Federal Reserve's interest rate hikes are faster and the higher risk of recession in the United States in the second half of the year will make it difficult for the USD to continue to strengthen. On the internal support side, on the one hand, although the general direction of the decline in exports has not changed, the super-expected export growth in the near term has raised the market's expectation of the magnitude of its decline, forming a marginal improvement factor of fundamental importance. On the other hand, against the background of a weak economic recovery in China, although the PMI has fluctuated, there is not sufficient evidence of its trend reversal. If its volatility rebounds or drives settlement recovery, the acceleration of unsettled funds that were holding up may offer support to the RMB.